As you approach Medicare eligibility, you often have many options for your health insurance. You can make Medicare your primary insurance, use credible employer coverage from where you work, or potentially use a retiree plan. Deciding what option is best can feel overwhelming. Now, we have helped thousands of people with this decision over the years, and in this video, we will discuss the things you should consider as you approach Medicare eligibility. As always, I'm your Medicare guy, Ken, and this is Medicare Explained, presented by NJ Life and Health. Let's dive into it. We just talked about Medicare, work insurance, and retiree coverage. Let's give some quick definitions for these three options. Medicare is a federal program that provides health insurance to people over 65 or people under 65 on disability status. Original Medicare by itself is great, but there are a lot of gaps in coverage, so people often get secondary insurance plans to help cover those gaps or get extra benefits that original Medicare doesn't cover. Creditable work insurance is health insurance you receive while you are currently working. Creditable seems like a fancy word, but it just means an actuary has evaluated it and it has been determined to be as good or better than Medicare prescription coverage. This is only available to people who are Medicare eligible and their employer has over 20 employees. Retiree coverage is health insurance provided to people who have worked for a company or union long enough to receive benefits even after retirement. You get this plan after you are done working. If you retire before 65, you may receive a retiree bridge plan that will hold you over until you are Medicare eligible. The first question we have to ask when deciding what option is best is, who are you covering? As you approach Medicare eligibility, you must first decide how many people your health insurance has to cover. If your spouse and you are Medicare eligible, it can make sense to go on to Medicare. If your spouse is younger or you have children needing more coverage, keeping your work insurance a bit longer may make sense. It can also make sense to have your spouse and you move on to Medicare and your child get marketplace insurance. If you are alone and have no creditable coverage options, Medicare can be a no-brainer. Figure out who you must cover and then decide which of your options best fits your situation. After you know who you must cover, you have to compare your options based on the coverage you need. Which options cover most of your doctors and have the most extensive networks? Which policies cover your prescriptions the best? Does your current insurance require constant referrals and authorizations? Now, to compare Medicare to work insurance and retiree coverage, you should know Original Medicare has an incredibly robust network of doctors and hospitals, about 95% of doctors across the country. There's also very little pushback from Original Medicare for hospital and medical procedures. You can also get secondary plans that help cover out-of-pocket costs or add in benefits Original Medicare doesn't cover, like dental and vision. Once we've compared coverage, we can then compare costs. We will start with your monthly premiums. Monthly premiums vary highly depending on your plan. Some work and retiree plans have monthly premiums of around $100 a month, and some employees have to pay over $1,000 a month for their coverage. Your spouse may also have to pay more than you for coverage under your plan. Let's talk about Medicare for a second. Medicare Part A is free for most people. Medicare Part B, on the other hand, has a monthly base premium rate of $174.70 per person. Still, you often have to add secondary plans like Medicare supplements, Medicare Advantage plans, or Medicare prescription plans into the picture, which could also raise costs. These additional costs vary greatly depending on your zip code and state. One of the main issues people encounter while working is that Medicare Part B's monthly premium can be higher if they are in a certain income bracket. When approaching Medicare eligibility, you could be in your highest earning years, potentially raising your premium from $174 a month per person to $349 or $594 per person. This is rare, but something to consider if you are a higher earner. Now, when talking about work insurance, we have to factor in each person's cost under a work insurance plan. We tend to find that the spouse not working for the company providing benefits has a higher monthly premium than the person who does. For example, imagine a couple with a monthly health insurance cost of $600 a month from their employer coverage. The person who works for the company may pay $100 a month, while the spouse who is added to the policy may pay $500 a month. In this instance, we may want the first spouse to stay on their work insurance while the second spouse goes on to Medicare to save money. In some cases, Medicare is a no-brainer because you save hundreds each month by switching from work or retiree coverage. In other cases, your work insurance has a lower monthly premium and it makes the most sense going forward. Now, if you are feeling overwhelmed at this point, you are not alone. Don't hesitate to reach out if you want a complete comparison of your options. We have saved the best for last. The most crucial factor to consider is your maximum out-of-pocket cost for the year. You calculate this by adding up all your premiums and calculating what you would pay if you maxed out your coverage for the year. Almost every health insurance plan has deductibles, copays, coinsurance, and other out-of-pocket costs, but the plan will tell you before signing up what the maximum amount of total cost you can accrue is before they start picking up 100% of the bills going forward. This number could be $1,000, $5,000, $10,000, or even more. It varies greatly depending on your plan. When comparing options, we always want to see what happens in the worst case scenario. What will happen if you have your worst year health-wise? We don't get insurance for when everything is smooth sailing. We get it to protect ourselves from as many situations as possible. In some situations, Medicare could cost slightly more monthly than your work insurance, but have a lower total out-of-pocket cost if something goes wrong. In this case, the extra premium could be worth it if you anticipate having many medical bills. You could also have work insurance or retiree coverage with an incredibly low out-of-pocket max. In this example, work insurance or retiree coverage could be your best option if something catastrophic happens. Let's bring it all together. Choosing between Medicare and work insurance and retiree coverage when turning 65 can be a big and confusing decision. There's no one-size-fits-all solution, but you can follow a few guidelines. Start by determining how many people need coverage and comparing which options have the best networks and benefits. After that, start comparing the costs of each option. The most important costs to consider are your monthly premiums and the maximum out-of-pocket cost of each plan if something goes wrong. Now, all this can feel impossible to comprehend at times, but you can work with the brokers here at NJ Life and Health to get an unbiased comparison of all your options and decide what is best for your family and you. Reach out to us at www.njlifeandhealth.com or call our Toms River, New Jersey office at 848-226-6897. We are licensed in 24 different states and always happy to help. If your work or retiree coverage is better, we will be honest and tell you. And if you're someone who just likes to learn on your own time, check out all the other great educational content on our NJ Life and Health YouTube channel. Please like and subscribe. And if you have any questions or concerns, feel free to leave a comment below and we will get to you as soon as we can. Thanks again and see you in the next video.